Welcome back, everyone. Next up, we have Stillwater Critical Minerals. It trades on the OTCQB under the symbol PGEZF and on the TSXV under the symbol PGE, and is rapidly advancing the Stillwater West Critical Minerals project towards becoming a world-class source of low-carbon, sulphide-hosted nickel, copper, and cobalt, critical to the electrification movement, as well as key catalytic metals, including platinum, palladium, and rhodium used in catalytic converters, fuel cells, and the production of green hydrogen. Please welcome its president and CEO, Michael Rowley. Welcome back, Michael. Nice to see you again.
Thank you. Glad to be back. Very happy to present the company today. Not only do we have a new deck, but we have a new resource just updated this morning, which is a major step for any exploration company. We are indeed the future of critical mineral supply, and we're doing that from a famously productive American district at the time when the U.S. is advancing exactly these commodities. That was a forward-looking statement, and I'm sure I'll be making additional forward-looking statements. Give you a broad overview of Stillwater Critical Minerals, and then talk about critical minerals and the need in the U.S. and the urgency, and then the resource update. We are a publicly traded exploration company. We are funded sufficiently in the near term and fully permitted. And we have 100% ownership on 3 district scale assets. That distinguishes us from a lot of our peers. We were making these acquisitions during the bear market timeframe. Focus is very much on the Stillwater West project. In fact, that's all we're going to talk about today. And the vision here is to become a primary US-based source of low carbon battery and precious metals. Stillwater West project in Montana, it lists those 8 commodities, all listed as critical by the US government. We're in a fantastic producing high-grade district with an $8 billion mining giant as a neighbor. We share that geology with them, and just this morning we released our updated expanded resource. We'll get into that in more detail. The numbers are very robust, and we're very excited about this project. Terrific expansion potential, and we'll be touching on that. We have a high-grade gold project in Ontario, district scale, and we also have a critical minerals project in the Yukon, Canada. We are looking for partners on that and in some good discussions towards that. And we've basically sold the Ontario project in a deal with Heritage Mining that gives us really good exposure to the gold space as a backup. In summary, a little overview of what we'll get into today, talk about timing, mining markets, and the importance of market timing in mining investments, and project stage with that. Critical minerals, global concerns, domestic supply, and then, of course, why Stillwater Critical Minerals. Terrific scale and grade, really without peer in the US, and for reasons we'll get into. Location, and then the team. Truly world-class team. Nice picture of core there. That shows the kind of things that excites us. Really sulfide-rich, critical mineral-rich core. And a lovely picture of the drill in progress on site at Iron Mountain. That's hole number 3 at Iron Mountain in progress there. Look at the importance of timing in mining markets, and basically how to work this in your favor as an investor. Great quote from Baron Rothschild: "Buy when there's blood in the streets, even if the blood is your own." This is something that's well known to us junior exploration companies. The bear markets are brutal on us. We barely, and that's sort of the 2016 timeframe. We barely got up and got a bit of breath when last year hit and the flight to the US dollar, risk off environment, and then tax loss selling. So terrific opportunities in the junior market space. This slide does a really good job. It's from our friends in Europe, Incrementum. It looks at the value of commodities versus stocks, basically, looking back over 100 years. And we see these broad swings where commodities are extremely overvalued and then extremely undervalued. The point we're at presently concerning the broad commodity index versus the Dow Jones shows that commodities are significantly undervalued relative to stocks. And there's a terrific gain to be had by being in commodities now, just for it to return to the mean, as shown here. This has been echoed even a year ago by Goldman Sachs, JP Morgan, who were urging investors to look at commodities investments. The ratio is now at a multi-decade cyclical low. That's the point. Looking more specifically at the development of a mining project and specifically growth stage stocks such as Stillwater, there's sort of two stages in the value curve. This is the Lassonde curve. It presents valuations of mining companies given by share price as a crude metric on the vertical axis there. And it follows a project moving from discovery through resource and then on to advanced studies such as a preliminary economic assessment, preliminary feasibility study, and then full-blown feasibility. With that, your risk, shifts from exploration risk to more technical and economic risks. And your investor base shifts from earlier stage speculative investors to more institutional investors, and then M&A by major producing companies. With that, your valuation increases, and ultimately, of course, you find out what's in the ground you're producing, and your metallurgy and all this stuff is well understood. This creates two optimal entry points for investors, basically because it peaks on sort of speculative interest, and then it falls back for that rather boring period of permitting and mine planning and such. We are very nicely ramping up on that value creation period. We've debuted our first resource October 2021, and we just this morning released a substantial increase on that resource with a nice high-grade component added. So we're moving up that curve very nicely, and that's a key point in terms of adding value in the company. Of course, this whole curve is also expanding with improving markets as well and improving sentiment, as we talked about in the previous slide. Critical minerals, what are they? The U.S. Geological Survey, who are partners of ours at Stillwater, has listed 50 minerals that are deemed to be critical for economic and national security interests. The U.S. has realized that it's importing sometimes 100%, sometimes the majority of these 50 listed minerals. And with that, it's looking to secure a domestic supply and has released an enormous amount of funding to encourage domestic production and processing. Tesla, of course, famously made this comment about nickel. They've also talked about lithium and other metals as well in that capacity. We're going to talk primarily about nickel here, but this also applies to cobalt and other metals. The need for domestic supply of critical minerals is being driven by really three factors that are coinciding at once, and it's creating a perfect storm for our sector. Deglobalization, climate change, and electrification are driving the need for metals. We're seeing an onshoring of manufacturing. This concerns chips, automobiles, everything. Don't make it overseas in China. We're building factories again in the US and in Europe and in Canada. Shift to green energy, and that needs substantial commodities, not only for the grid, but to build solar cells and wind farms and batteries and such. And the broader electrification movement and the need for nickel for batteries and such. Environmental and humanitarian concerns are also driving the need for domestic supply of critical minerals. And this is the recognition that a lot of metals mined internationally are not mined to the best standards. 80% of cobalt is in the DRC. Some real questions there about humanitarian and environmental concerns. Nickel from Indonesia is a big one. 2/3 of the world's nickel is produced in Indonesia, New Caledonia, places like this from laterite ores that take a much greater environmental footprint to arrive at a battery-grade nickel product that's much better to mine nickel sulfide, which purifies much more easily in the US at first world standards. Commodities that are sourced outside of North America often have a greater impact. National security concerns. China controls 80% of global critical minerals. This came as a surprise to some people. 73% of cobalt, 68% of nickel. There's no reason for that. America has amazing geology and can be meeting its own needs. Russia is the world's largest supplier of palladium and also nickel sulfide. Again, drawing that distinction from nickel laterite from more tropical places. This is suddenly now, with the war in Russia, very apparent that we need domestic supply. The point, it's better to mine responsibly in the first world and to first world standards. The U.S. is a net importer of dozens of these commodities as listed. With that, the Critical Minerals and Materials portion of the Infrastructure Investment Jobs Act, hundreds billions of dollars allocated to spending broadly, and with that, a lot of money towards securing critical minerals exploration and processing of. Outlook for prices on these commodities, copper, nickel, cobalt here. In order to meet the IEA's net zero targets, we need substantially more of all these metals, cobalt, nickel, lithium, copper. And with that, we're going to focus on nickel here again, because that's about 50% of our resource. Where's that going to come from? We can't recycle this amount. There's not that much in circulation, and the technologies are not there anyways. Hence the need for mine supply. Montana is an excellent place for critical minerals. It has produced them historically, and starting with copper, actually, including high-grade copper on our claims, which says a lot that this is past producing ground. And then that shifted to chromium during the war years on our ground, actually. And copper mining large scale continues to this day in the state at those sites listed. Rio Tinto is partnered with the U.S. Geological Survey for the Earth MRI initiative. This is focused on critical minerals in that area shown, geophysical surveys targeting critical minerals. And we have majors active in the state. Ivanhoe and Rio Tinto both very high profile ventures with exploration stage companies, not unlike Stillwater. We share the Stillwater complex with an $8 billion neighbor, Sibanye-Stillwater. This is a formation that's visible from space. In fact, our claim block is visible from space. And we're going to focus in on that red area in the south of the state on the next couple of slides. Good history of critical mineral production. Stillwater's been producing critical minerals since before they were critical. Copper, and then chrome, and then the PGEs that our district is known for. And then we debuted our inaugural resource, bringing significant battery metals to the scene, and expanded that just today with that additional release. Sibanye's produced over 500,000 ounces of PGEs per annum, and unreported amounts of nickel, copper, and other metals as well. It's worth noting. In addition, they produce a greater amount of metal from recycling operations too. We're bringing bulk to that scale. We're a much larger mining model. We would bring economies of scale, and we bring significant battery metals to the district as well. Take a look at the claim block. Sibanye-Stillwater shown in gray, and their JM Reef deposit is that skinny purple line cutting your screen. Our claim block in yellow. So we share the district with an $8 billion giant. This is very rare in the junior space, and it gives us a major leg up. We share the Stillwater complex. This is fantastic geology. This is something that geology students all over the world study. It's one of the absolute best and biggest in the world. It hosts the highest grade palladium platinum deposit, and it's highly prospective for all the commodities listed there. The JM Reef itself, over 100 million ounces when you include past production at the highest grade in the world. There's a lot of metal in the magmas that laid down this system. They operate 3 mines on that one deposit, and they have that smelter and recycling complex off the screen to the north there. We're focused in the lower part of the system. The slides are jumping around a bit here. There we go. We're focused in the oranges and purples, and that's the correct model for what we're doing. Being the Platte Reef setting. So this in South Africa is where you find giant mines such as Mahalaquena, Anglo American's Mahalaquena, and Ivanhoe's Platte Reef. And that Platte Reef term is significant. That is basically our mine model. And we have 2 of Ivanhoe's best geologists join our team just about 10 months ago now. So you can get an idea where this is going and the kind of expertise that we have to get us there. I'm going to focus in on that main claim block there, shown in red. This is perhaps the most meaningful technical slide in the deck. It's the kind of magic that we work to identify minerals in the ground before we drill them. The areas in pink and purple, pink and blue, sorry, are chargeability and conductivity highs, respectively, from a ground-based induced polarization survey. So you hike the ground taking electric readings, and you can project down, in this case, up to 800 meters into the rocks. What we see looks like large bodies of sulfide mineralization, which is exactly what we'd hoped to see. These are the largest, most robust, and also highest response that this team had seen. And these guys do a lot of surveys. This is Simcoe Geosciences. In yellow, you have our deposit areas. This is the 1.6 billion pounds of battery metals, 3.8 million ounces of PGEs and gold. You can see how they're set so nicely in there, indicative of great expansion potential laterally into the adjacent deposit areas. The scale here is without precedent. We're covering 12 kilometers of magma that is well known to be well mineralized. In each case, we have a low-grade deposit and a high-grade deposit, and we're open to mining in either model at this early stage. And in each case, we've shown you here some of our better drill results. In every of these 5 deposits across 9 kilometers, we've got a bulk case that's hundreds of meters of bulk mining grade, and then within that, tens of meters at a high grade. And we're seeing really good tenor of the sulfides, particularly nickel. And this is important because this distinguishes us from many other nickel projects with low tenor nickel sulfides and presumably low recovery. But it also distinguishes us from those laterite projects in Indonesia and New Caledonia that are much more environmentally challenging to process to pure nickel. Terrific expansion potential here, and of course that 100 million ounce deposit of our neighbors is sitting right next door, and they're mining just a short distance away, just a short distance north of that Chrome Mountain deposit area. This is an active district with a lot of metal and a lot of room for us to grow. Just this morning, in fact, just about 2 hours ago, we released our updated resource estimate. This is a big step for a growth stage company, and the fact that we were able to add these at less than 2 cents per pound nickel, less than $2 per ounce precious metal, speaks to not only the team, but just how well endowed this district is. It's frankly great fun. We're over 1 billion pounds of nickel now in the base case. And to put that in perspective, that's more than both the US's only producing nickel mine and the mine that's coming online in 2026. It is more than their total resources, including past production, put together. This is a significant addition to the US's inventory. Similar story for like cobalt, for example, which is largely from the Congo. The 91 million pounds we've got here is very real. 3.8 million ounces of precious metals, that's enough to really engage with a major mining company. We run a variety of cutoff grades to show the optionality we have in mine models. There's a higher grade bulk mining scenario. And there's the truly high grade model, nearly 12 million tons at over 1% nickel equivalent grade. This is getting very interesting, and it speaks to the size potential. If you think back to that 9 kilometer slide, we can very likely connect these dots across that 9 kilometers and grow this very quickly and inexpensively. 62% resource increase announced this morning. We're feeling pretty good about that. These are critical minerals in the US at a time the US is looking for them. We have the PGEs, we also have the battery metals, and that is unique. We have probably economic amounts of all of them. Some of these magmatic projects are focused on nickel, maybe copper, cobalt, some of them on palladium, platinum. We've got it all in a nice internally hedged blend. Pie chart there shows the relative value. We're about 46% nickel at the prices used in the study announced today, $9 nickel. Next in line is palladium, 20%, and then on down through copper, cobalt. The objective here is to become a primary US-based source of low-carbon battery and precious metals. 8 of these have been listed by the US government as critical, and they've released unprecedented funding to secure that. And of course, our location. We're located in a producing district on ground that has produced historically. There's already a smelter in the district. Senior management, I'll invite you to do a deeper dive on this on the website, but myself, I'm a founder of the company. I've been in mining since 1990. Danny Grobler, the next name on the list there, is the fellow I mentioned who joined us from Ivanhoe recently. He was chief geologist of Ivanhoe in South Africa until April of last year, when he joined us as vice president exploration. Also, Albie Britz, they both together have decades of experience advancing Ivanhoe's Platreef mine, directly relevant to what we've got here. We made the acquisition in 2017. We quickly tripled our land position. We've drilled it 3 years in a row now, and we've issued an inaugural resource and then a healthy increase of that resource. We have lots of room to grow, and we're excited about that. That updated resource estimate just went out this morning, so that catalyst is ticked off the list here. Up next is continued exploration results from last year, some information on carbon sequestration that we're doing, and initiatives with Cornell University and DOE grants in addition to local university here. Metallurgy is important, and we've got very positive news flow coming on that. And then, of course, our 2023 field programs, which we expect will be our biggest ever. We see great potential to grow this, and we've got the right team. We're excited. Heritage Mining will be issuing updates as they grow with our Ontario project, and we're looking forward to that. They have further cash and share payments to make to us as well. And the Kluane project, you'll see some updates on our critical minerals work in the Yukon as well. Capital structure, like many companies, we took some lumps last year. We did not have to raise money at those prices, and we still do not even today, thanks to some warrants that came in last year and the fact that we run a rather tight ship here. We're in an excellent position to get out the current news and continue a number of conversations that we've had with major possible partners on this world-class asset. We're rebuilding share price nicely after the lows of 2022, which were driven largely by a flight to the US dollar and a general risk-off environment that hit our whole sector. Currently sitting about a 35-40 million Canadian market cap, we have over $20 billion of gross metal value in the ground. And I understand that's an inferred resource. Can't assume that will all come on the balance sheet. The difference is profound. And the upside here, for all the reasons we stated earlier in the junior sector, and then, of course, what we're working on here, there's just so much room for us to move up. It's an exciting time of growth for the company. We're currently funded adequately with about $2.5–3 million cash and cash equivalents. And we have up to $8 million in warrants available to us this year at 25 and 30 cents Canadian. So that makes a nice plan B for us. Plan A would be some of the conversations we have underway with majors as we look to grow this and with funding partners. With that, I'll wrap up and would be glad to take any questions from Anna.
Great job, Michael. We do have some questions. So talk about what you see on the horizon for your company over the next 12 to 24 months and how will you fund your development plans?
Sure. Thankfully, the roadmap for this is pretty well paved. You know, the precedents are there. We've established ourselves as basically without peer in the U.S. We've got the attention of majors. We have 3 under NDA now and other conversations upcoming. We're looking to advance those conversations here over the next quarter and see where they lead. That would be one major piece. We're also in some good conversations with big funds, big name funds and that sort of thing. All that at a higher share price after we've gotten to work on the price a bit will drive our biggest programs yet. And that's the second important piece for this year. We foresee our biggest drill program ever as we maintain our focus on growth. As you've seen from that image, there's lots of room to grow this. We may look to begin to upgrade resources as part of that, but frankly, we can keep drilling 100-meter offsets and add terrific value that way. It's wide open for expansion. Yeah, that would be the focus for this year.
Fantastic. Talk a little bit about why the U.S. is lagging in its metals production, or at least in many that you cite, the nickel and cobalt in particular.
The U.S. used to be very big in mining and has terrific geology, actually. Unlike other island nations like Japan or the UK that are looking at critical minerals, the U.S. actually has them. So why they got off, I don't know, but it's come back in a very big way. And it's the realization, I guess it's the pullback from globalization, isn't it? That we can't rely on these other countries, that there's exposure there. It's those economic and national security concerns that have been cited. 100% of the graphite in our cell phones came through China. There's no reason for that, but they process it. The U.S. should be processing that and securing its own graphite supplies. Similarly for nickel, although in that case it's more like 2/3 of nickel comes through China. But the same concerns are there, and the U.S. has woken up to it, and a little bit behind other countries, but is releasing unprecedented funding to secure those domestic supplies. And we're in line to receive that. We've worked with the USGS now for years. Those conversations are moving very nicely. We've also recently added the DOE and Cornell University to that list as well. And all that will continue to unfold here in the coming months.
And can you talk a little bit more about those conversations you've had with higher level government regarding the need for projects like this?
Oh, absolutely. Yeah. So far, the focus has been on more advanced stage funding projects and processing. But exploration is very real, and you obviously can't have a supply pipeline if you don't have the ounces in the ground, the pounds in the ground to feed the whole system. So absolutely, conversations have been very positive, and it helps that the USGS, US Geological Survey, has been studying Stillwater for literally decades. So they're already there. They just needed partners that would work with it. And with us there as of the past few years, and now with government funding coming in, I think that'll be very exciting.
Also, this announcement this morning, you mentioned increase the size of the project. So how big do you think it can get? And can you give that context against its peers?
How big it can get gets very hyperbolic and forward-looking. Put it this way: Ivanhoe's Platreef project is 112 million ounces of precious metals, PGEs and gold, and 4 or 5 billion pounds of nickel and copper. And we have 8 times that. We could fit 8 of their deposits or more across our 32-kilometer span in a district that's actually known for having higher grades anyways. So this looks to like it wants to get very, very big. Even in the high-grade case, you know, that 0.7% nickel cutoff that we've put forward for the first time now, just connect the dots on those 5 deposits across 9 kilometers. Yeah, the sky's the limit so far. It's a big and well-mineralized district. The whole Platreef district, South Africa, is 400 million ounces and tens of billions of pounds nickel and copper, cobalt. So, yeah.
Talk a little bit about your relationship with Cornell University and what that might yield.
Excellent. A very new relationship. These conversations only started in November. I think we're just getting going. We're their industry partner, their first mining partner. For carbon sequestration work, which is so important. We have the right rocks to sequester carbon, and that would aim for a net negative, net zero, even net negative carbon footprint on your nickel product, and benefit by getting 45Q tax credits under the current tax system in the US. We're also with Cornell looking at some ingenious hydrometallurgical processing techniques using carbon dioxide again. And this would get away from smelting of ores, you know, and processing. So really progressive stuff, and we're very excited to be part of it.
So the electric vehicles are taking up more market shares. How do you see that impact the PGE prices given use in the ICE engine catalytic converters?
That's a very interesting topic, and a lot of people thought palladium, rhodium, particularly because they're used in gas engine catalytic converters, the value would just fall off a cliff with EVs, but that has not been the case, and that's actually not what the projections are. It's very likely that rhodium, palladium, platinum, well, let's start with rhodium and palladium, will stay elevated for 10 or 20 more years. Gas engines aren't going away. India and China in particular are seeing tighter and tighter regulations. They're using more and more of these metals. It's here to stay for some time. And then you get into the you know, the concept of biofuels and things. These are good catalysts, and they'll be around for a long time. Platinum is a darling, kind of separate from the other two. Fuel cells, of course, are coming on, and platinum is the preferred catalyst for producing hydrogen and then consuming that hydrogen. So good growth upside there for platinum.
Would you consider selling your website domain, criticalminerals.com?
We did, one fellow on our team, Chris Ackerman, did brilliant work getting that for us. And it's, but if you want a district that's been producing critical minerals since before they were critical, it's Stillwater, frankly. And many Americans don't really realize what they have there, I think. Would we sell the domain? No, maybe along with the company at the right price.
Right. Yeah. Keep it for that. We have a little bit more time. I want to see if we can squeeze a few more questions in. Don Simpson says you're in gold and battery metals. Would gold be considered a battery metal? And can you give a timeline of each precious metal to production?
Well, they all occur together. So this is a true polymetallic project. So the production question is easy to answer. Given that we have a producing neighbor right next door, I would think this project could be fast-tracked to production. It typically takes 15 years in the US as the stat. You can do faster in some districts and much longer in other districts. It's even hopeless in some districts. This, the scale of years, but I guess a key point is that we have not yet put the studies around it that would enable a mine. We're in a growth phase, and we see a lot of room to grow first. And that's our best way to woo the kind of partner that would build a mine, whether it's our neighbor or a Rio Tinto, a BHP, Ivanhoe, you name it. That's the typical progression in this industry. We certainly would look at building a mine with the right partners. If Tesla or Ford came in to back us, we could certainly get the people. In fact, if you look at my board, some of them have built very large mines. The most likely model follows that Poisson curve of us adding value, de-risking the project, and then doing some sort of intelligent deal with a bigger party. As for gold, gold is not strictly speaking a battery metal, but it does occur with the others, so we list it. It makes a nice co-product for us. Ivanhoe, of course, is producing it at Platreef in a similar setting. And then that Pine news release that we put out just 2 weeks ago, I think, shows a very high-grade gold occurrence west of everything we've talked about today that stands alone. There's drill-defined mineralization there, perhaps 8 grams per ton gold, that is not yet included in our resources. And that's the kind of low-hanging fruit that we can work to bring on the table this year as a standalone gold project.
It's fascinating stuff, Michael. We are out of time, but we will send you the rest of the questions so you can answer on your own. Please join us again in the near future.
Thank you. Be glad to be back, and thank you for hosting.
All right. Thank you so much. Okay, everyone, stay with us. We'll be right back with our next presenter.